Good day and welcome to this episode of the Sanlam Investments Fast Fund Fact Series. With me is Ralph Thomas, co-portfolio manager of the Sim Balance Fund. Ralph, you know the drill. I'm going to put you on the spot. I'm going to put you under pressure. I'm going to fire some quick questions at you. I want the facts. I want them fast. Are you ready for this?
Let's go.
First question, changes to Regulation 28. Is it an opportunity for the fund?
Absolutely. Anything that sort of increases your ability or reduces restrictions generally increases your opportunity set to explore. There's much better prospects in terms of diversification and foreign equities, and we'll definitely look to explore that as valuation allows.
Okay, over the last 6 months, markets being very volatile, a lot of uncertainty, a lot of moving parts. Has anything changed in the way that you manage the fund and how clients should utilize it?
No, nothing has changed. We still retain a two-pillar strategy approach, bias to growth assets over the long term, and a commensurate risk management strategy or derivative usage strategy. Has anything changed in terms of the use case of the fund? Absolutely not. It is still orientated to the long term. It's orientated to give you the best long-term returns for your investment.
You manage a multi-asset fund. You can access various asset classes. At this point in time, any preferred asset class?
Can I say growth assets, or do you want something more specific?
No, you're not going to go with that. Get away with that. A short, quick one.
Well, at the moment, South African equities do appear cheaper, but generally, equities, both foreign as well as local, represent fairly good entry valuations at this point in time. So if I had to pick one, I'd maybe say 3/4 foreign, 1/4 local.
Thank you. I'll take that.
Sure.
Final question, derivatives. You use it frequently. You use it very successfully in the fund. Is it making sense at this point in time to utilize it?
Absolutely, Hilly. Derivatives give a lot of comfort in terms of our asset allocation positioning. I showed during the presentation that you could argue that our asset allocation was wrong to enter the first half at. Did we know what was going to transpire? No, we did not. Of course, that's what makes asset allocation difficult. But having the ability to hedge and having hedges in place means that the risk of getting it totally wrong is reduced. And I think it's borne us quite well during the first half of this year to show how our derivatives really have added value.
Ralph, thank you very much. I must give it to you very fancy footwork around the asset class question, but I think you've done well. Thank you for sharing your views. And to our audience, thank you very much for joining us for this episode.